Let's start the recording for this week's meeting. Right now, as I come in, what's driving the market is driving the market. The back and forth with this China negotiation. We had Kudlow this morning say that some positive comments, we rallied. Then we had Vice President Pence say China wants to avoid an all-out Cold War with the United States and its partners. It must fundamentally change its behavior. Market just sold off with it. Trump just tweeted about North Korea. The New York Times story concerning North Korea developing missile base is false. That's not really driving the market. The other one was Brexit. That's a driver. That's what we try to do in these meetings. And this part of the meeting isn't as relevant for people watching in 2 or 3 months because these are recorded and archived, as you guys know. But it is important to underscore that there's usually a driver in the market. Or when there's a driver in the market, know what the hell it is and anticipate what could come out so you could catch it. Now, I'm man enough to know I made a mistake this morning by not having Kudlow on live, and I missed a jump from 24.25. It was bullish in the team room. Some guys were already long based on some price action. And then the tailwind with the Kudlow comment that he was positive that they're meeting on all levels and that's good, blah, blah, blah. We rally. It's just an anticipation and reaction. And that's what's important. Now, the comments are going to come out both sides. You got to anticipate maybe China coming out and saying, I think that this Treasury Secretary Mnuchin is a jerk or whatever, know what to do when these comments come out. So now, prior to me starting the recording, I asked everybody, good, bad, okay, or nothing over the last 2.5 months, right? So we're in mid-November. How have you done since the fall? We ended the summer. We entered the fall, September, October, November. And generally, October is the busiest month of the year. No disappointments with this past October. What drove us lower and all this volatility was global interest rates being a little higher than the markets wanted. They're worried about 2019 and Powell and the Fed raising rates a little faster than they wanted. Not necessarily fast, just faster than they wanted. Global interest rates going up, Treasury prices going down. So that's been a driver, created all that downside in October, and we're still not out of the woods as far as that is concerned. We got past the elections. What was baked in pretty much happened, but now what drove us lower are some headwinds about what yesterday? What's the theme? Worry about trade war, worry about nothing getting done in Washington, just several of them. So it's Apple. Great, Mark. You ask me if I'm talking and then you say Apple. You guys hear me? And do a sound check, but everybody sees my white screen and here's my voice, I hope. Okay. You had the volume low. It's that thin air in Colorado. So Apple, here, we'll get cute, draw an apple. It looks like a pear. Apple, some of the FANG stocks dictating direction. So it's not just one thing that was moving us or driving us lower on a reprice session yesterday. When I say yesterday, I'm talking about November 12th. We're the 13th if you're watching, November 13th if you're watching this in the future. The driver, though, is China and the U.S. and how these trade negotiations navigate, how we navigate through them, what the rhetoric is. November 20th is an important date. Argentina meeting G20, Xi and Trump are going to meet. What do you think they're going to want to talk about? They're going to want to talk about something that's positive for both of them. They both want to reach some sort of deal. They really do. I don't think either one of them want a trade war. It's not good for either country. But they want this. And I think at some point they'll get that. You've seen it with Canada and you've seen it with Mexico replacing NAFTA with that new agreement a month or so ago. And I think you'll see the same thing with the Chinese and the U.S. But these are the drivers that could make you money. And if it doesn't make you money, hopefully it does not lose you money, because what you don't lose becomes more important than what you make at times if you're not privy to what's going on. Saving money is like making money, and that's the definition of risk management. It isn't always getting on the right side. It's staying off the wrong side. So I didn't plan to do this, but I was talking, I did a survey, good, bad, okay, or nothing, in the 2.5 months after the summer. And there was a good mix of both. I'm just going to read through them again. Good, okay, good, bad, I didn't trade, okay, nothing, not too good, nothing, good, okay, good. All right. Anybody else? So what I would focus on are the two people that said first, bad or not too good. Unless you're going to see me and be on a couch, and if you did see me in that setting, I wouldn't put you on a couch. You're going to have a tough time isolating why you're bad, why you've been trading. Not you're bad, don't take it personal, but why you've been trading poorly. But you have to have someone tell you that after they know about how you're trading. That's what the definition of a good community or a good group is about. Because the word group or community doesn't mean S-H-I-T. It's community prefaced by this word, good. Because just because you belong in a community doesn't mean it's good. You might be in a community, you got to lock your doors and keep firearms next to your bed. That's not a good community. So just because you're around people doesn't mean it's the right people. This is, and I know it because I've known most of you guys, and everybody in here is one thing, normal. Hard to get these days. But I said 98%, I don't know, 98%, that's trying to be too exact, but 95% of the people who've done this course are normal, minus one. Let's say 99.9, and the 1/10 of 1% is Carl. But everybody is normal. And so when you're around normal people, you put yourself in a position to get better results. Normal. Just be normal. Just be normal. And people want to be better parents and better husbands, better wives. Start with that word, normal. But in order to distinguish or find out why you're trading poorly, why you're trading not good, you gotta have somebody understand you and your trading and have them tell you. It's hard for us to always self-criticize ourselves, right? I just know that every time I look in the mirror, my hair looks perfect. So I got to ask my wife to make sure. Same thing goes with your trading. You might not know why it's bad and you're afraid to say it, or you do and you got it wrong. A lot of times we say something that's bad and it's actually good. You think it's bad and you're going to play away from a strength that you didn't think you had. That stuff happens. It does. So I want the people who said good to know why and be certain of why it's been good. Those that have been bad or not so good to know certain why it's been bad or not so good, or it's going to stay bad. And you have to look in the mirror and blame that person. Not that you're not, but you got to start there. You really do. So let me erase this and get into what this week's meeting is about. And again, it's the 13th of November. The value of these meetings is that you got to hit like some sort of, I don't want to say reset button. This doesn't reset you every week. You got to go somewhere. You got to be able to, when I worked at the prop firm, we had meetings daily. And if we didn't, we had meetings a couple times a week, different kind of meetings. We'd have quick meetings where we would go around the table, see how everybody did. Then we would have longer meetings to prepare for, maybe it was an FOMC or a unemployment report, company meeting. And then we'd have meetings, just maybe sometimes a groups of 3 or 4, to talk about whatever there was to talk about, what was driving the market. And then we'd get into some of these things. Someone would read a great book and they'd host a meeting and talk about it. So it's important to do these meetings, and that's what's unique about this program, is that it doesn't end in value, and it's not just a Q&A fest. There's a place that someone said they came from, and they do these meetings, and it's just a Q&A fest. There's nothing wrong with getting answers to questions. That's important. But if that's all this was about, you get sick of listening to other people's questions. I feel strongly that there's no such thing as a dumb question unless it's somebody else's sometimes, right? I like questions. I think it's important. But if this is all that this meeting was, it'd be boring, and we wouldn't do it in a prop firm, and I certainly wouldn't want to just do it here. It is a place to ask questions, but that's not what it's all about, as you guys know. So the value, and I briefly mentioned this in the trading room yesterday, because a lot of the topics I come up with over the weekend before. And I think through some of the things that I've written down to cover, come up with new things based on how the market's trading, what someone might have said to me or whatever. And I wrote this down after I went for a walk. And if you lived in my neighborhood and see me walk around, you think I was a little crazy because I smoke cigars and talk to myself. And take my dog that I wish I didn't get, even though he's a good dog, for a walk. Sometimes I don't pick up after him, but I pretend. But either way, you think I was a little crazy because I'm talking myself through helping you guys. So the value that you guys have are these walks, right? And this weekend, I thought of the difference between the good location and an opinion. What do I mean by that? A good location is getting long at the beginning of a rally. Use the word beginning. And then it goes up. The opinion is it's bullish after it went up. There's no value in that. That's buying Apple after a $50 rally, right? It's bullish, okay, but you didn't buy it before it rallied to $50. Facebook came out at what, $35, and it went down to like 15, and then it rallied to what? What was Facebook at? 150? Went up to, I think, 200? Something like that. Well, the value isn't saying Facebook is strong. The value is the people who were laughed at buying it here because it went there, or the people who bought it at 20, at 30, and held it because it was an investment. It wasn't a trade. If it was a trade, then you screwed up buying it on the open. So you have to know what your intentions are and separate longer time frame trades / investments with trades. What are your intentions? How soon do you expect it to go? Will help dictate how much or how little anxiety you should have as you wait. If you need it to go pretty soon after you start identifying what the beginning of the rally is, well, then it should go, right? If you expect it to stay above a price, if we're using the example of getting long, then it should stay above that price. And your process is setting all these things up so you don't have to think about it once you're in it. Because once you have to think too much, once you're in the trade, you're almost dead. There's some thinking involved, I get it, but that's also a process to get in and a process you're running yourself through after you're in. So I'm listening to this guy on Trade the News for a second. So going back to my notes, when you see a market look like, all right, and I'll put look in quotes, it looks like the beginning of the rally, but you're able to start the process of no, yes. Think about that a second. It looks like it's going to rally. You're bullish. Not yet, not yet, not yet, now. What is that for you? What is that for you? What are you looking for? To say no, 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 now. If you remember that movie Trading Places, when Eddie Murphy asks Dan Aykroyd, I think it was to get out of their trade. It was not now, not now, now. And what was he looking for? And I'm not looking for the answer to that, but what are you looking for? All these, though, do not have to be the same for everyone. No, 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 yes does not have to be the same for all of us. It could be slightly different. It's supposed to be different. You're finding something that's working for you. Don't get bogged down if someone else can't also find it working for them. That's what I've learned in helping other people. It's not everything I say is going to help everyone the same or exactly the same. Some things will help others more than others. But I'm not going to sit here and say everything I talk about is gospel. You have to go through it the same or you're not going to make it. That would be like everyone's going to then look the same and everybody should trade the same. It's not, we're not going to have that dynamic. Sometimes it's no, no, yes. Sometimes it's no, yes. Sometimes it's yes right after it looks like it's going to rally. What's your yes is what I'm getting to. And then I wrote on here, let me back up. And I'm going to read what I wrote after I came in from this walk. When you're at the beginning, I got to read my writing. It says, let me back up. When you're at the beginning of your trading career, you're not looking for the beginning of the move. You're just trading it late after the move. Does that not make sense or what? When you started your career, you weren't looking for the beginning of a rally. You were looking for getting into it after the move, in the middle or probably the end of the rally. Why? Because the trend is your friend. It went up, so it's going to go up forever. You weren't bullish until it went up. You weren't bearish until it went down. And generally, you're at the middle or the end. When you're at the beginning of your career, you look at charts and you look for a pattern of it being bullish. And oftentimes, the patterns that are most popular out there, a fifth grader could tell you it's bullish. If a fifth grader could literally tell you when looking at a chart, they have to have an idea what the chart is, right? But if a fifth grader could tell you it's going to go up just based on it went up, that's not enough. Now, if a fifth grader said, hey, Dad, I think it's going to go up because it's consolidated in here and there's a lot of stuck shorts and selling in here and they can't get price to go down. Big bids are showing up, goosing the market up, and they're pulling some offers. And right above here, it should rally. Now we're talking. Now we're talking. What makes the difference between a good detective and an average detective? And I think we just had a detective sign up for the Edge Group. So we're broadening our career makeup. No, I didn't want an answer to that, Phil, but good answer. What makes the difference between a good detective and a bad detective? Bad detective will tell you that he did it when it's obvious. A good detective starts to get suspicious with some evidence, but he's consistent with the evidence he's looking for. And I don't know that. I just made that part up. Point is that I'm reading what someone just said, and I think it's awesome. What you just said, Mark, I'm going to read it. I'm afraid to get in at times at the beginning because there's not a lot of evidence other than the setup, he says. So that should remove that word afraid, because what you said was exactly right. The setup. what eliminates fear? We talked about this, I think, in a previous session. You can't eliminate fear unless you replace it with something. And you replace fear with confidence. What's the example I use for that? If you're afraid of getting beat up, and yet you now train to defend yourself, you're confident you're not going to get beat up. You replaced fear with something, a skill that led to confidence. You got to trust the setup. The market's going to try to make you scared. It's going to try to make, just like a suspect is going to try to throw you off the trail. They might be good at it. They might be bad at it. Sometimes the market's good at it. It's a tougher market. Sometimes the suspect's bad at it. It's easier to distinguish whether or not he did the crime. The market's going to try to throw you off your trail, but you got to look at the evidence, which is the setup. Evidence equals your setup. If you're not at the beginning of a rally, then where are you on the map, right? When we talk about where you're at on the map, to know where that rubber band stretches. But also an important part of today's session is to take a chart that looks like this. All right, let's just take a chart that looks like that. What doesn't matter periodicity. And what you have to do is you have to break this chart in your head into fragments. That's the rally. That's the retracement and chop. That's the sell-off. That's the rejection and pullback, first move. The second move. That's the chop. That's the rally. So you broke up the chart into the phases it went through. The rally in here, the sell-off and then chop. The next move lower, the rejection, the pullback and rally is from here to here. The chop, the next move up. Any chart you watch of any market, you have to break up the move and say, you know what? Is the move over? Where are we at in the move? We had a move from 24 to 30. As it turned out, overall, that was the beginning of the move. You drill down into it, you got to know where you're at and why that move started and break it apart. My mouse isn't working. Hold on. There we go. I was stuck on some fuzz on my desktop. So break apart the chart into moves. And what you could look at this and draw a parallel of chapters in a book, right? Whole session is a book, and the chapters are the moves and the story you might have been able to tell inside of it. The Brexit news continues. That's why there's gaps in me talking, because I'm listening to some of this Brexit news drop down the wire. Let me read some of the questions and comments. In the beginning, this individual said they were dumb and used indicators which were totally useless because they lag, using order flows in the moment to get you in the beginning. And that's well said. Order flow, and the other thing is correlation. That's the overlap. Correlation and intermarket relationship and order flow is the building blocks. Could be both, could be one, could be the other. It doesn't have to be a correlation between markets. It could be a correlation between Kudlow and the market. That's a relationship. It could be order flow that guys in the team room picked off this morning with Kudlow behind it. That was a perfect scenario. And if you listen to his comments live, it was a click, 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 click moment. Each click is whatever size you got loaded in your chamber. Long, 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 and you're just confident it's going to rattle if you got it in that 25 area instead of 30. Another comment, trusting the setup requires confidence. It's not 20 pieces of evidence because then you'll get confused and do nothing. And you can't look at an entire puzzle and solve it. You got to start piecing it together and you start to see what it looks like. But you can't make a determination with all the pieces apart, and you can't wait until it's all put together because then it's too late. The beginning of a move. If you're looking for a rally, what's your no, no, not yet, not yet, not yet, now moment? And are you in the beginning of it? If you caught 25s and then Kudlow's comments came across Trade the News and we were trading 28, you knew you caught the beginning of it because it hadn't really moved until you heard it, right? And then Trade the News came out. Man, that's got to be a big tool in your toolbox, right? It's like when you open up your tool chest of tools, you see pictures of me in there, but then you see a big shiny tool, and that's your ability to trade headlines or something on TV. It might be a little scary to see a bunch of pictures of me in your toolbox, but I don't doubt many of you have them. Not scary, but weird. Now let's go to a chart and see what I'm talking about with live charts, because markets are whipping around and some of these headlines are moving up. They're not really clear and concise. So let's go to my screen share. And this is a 12 PNF. So your moves are going to be, we'll go over that second. Let's go over a 4 PNF, right? This is a chop. When I say break up the move, when I my eyes get fixated on this, what I'm doing is breaking up the move. That's a consolidation. And I see it before it's over with. This was a move up. This was the consolidation. This was the move down. This was a consolidation. This is a move down. This is probably consolidation developing. You see how I broke that up? So now you're reading the chart without having to jump into the numbers right away. But just break it up. Move sideways, move. And you don't always get move down, consolidation, move down, consolidation. You don't always get that. Now, if you caught this trade short up here, you now know you were at the beginning of a sell-off. You also know that you were close to maybe the beginning of it because it topped off right there. Now, you don't know if it topped off right there because we could rally afterwards, right? But you know, if you do start to get it, you were at the beginning of it. Does it give you more confidence to stay in? It could and it should. Did you have a bearish thought up here? Did you have a not yet, not yet, not yet, now? And what would that be? Did you review it and see if your no, 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 yes are good, bad, or terrible? Because you're not going to get confident by trading it and making money. You're going to get confident by seeing it work, then trading it, and then the rewards come. Everybody wants the money to give them the confidence, but it's the confidence that'll give them the money. And you could write that down. Everybody wants money to give them confidence, but it's confidence that gets you the money. Because you're not going to get and reap the rewards without being confident, right? And it's backwards, and that's the way our mind works. Everybody wants the reward before the risk. You know, I'd like to be able to Well, I'll give you an example of this. I had some work done in my house, and I'm creating a little area for my kids to play their Xbox. And I did electrical work before I started trading when I was in college. So my brother's an electrician, my dad's an electrician. So I got tools, right? But I don't use them a lot. I got decent tools and I know how to use them, but I don't use them. I want to hang these TVs, and I've got a cordless drill that I can't get the battery to work on it, and it's a new one. I got a drill to plug in, and I lost the Allen key to change the chuck on it. And it's like, man, I'd like to just have if I just had all these tools laying out, I could put this up in 3 seconds. I know what the tools are. I can't put them together because I don't use them a lot. So if you're not using the tools, you might have them, but they're lost or the battery's not charged. You might think that's a kind of funny analogy, but it's like, I don't do that all the time. And I'm not, and some people are computer illiterate. I'm not tool illiterate because I got good tools. And it's like with trading, do you have good tools? And I think if you're reading order flow and you got, I think a lot of software that, and I'll say this, 5 years ago, definitely 10 years ago, 20 years ago, there was a lot of crappy software out there, right? And as electronic trading is now almost in its second decade, a lot of the crappy software is either gone or got better. And so there's most of the software that's out there is a good tool now because of how long we've been into this industry trading on a computer. Early on, which maybe the first decade or so, there was a lot of crap. Either that crap is gone or it's morphed in to become better. And that's why I think you have price pressures in the days of hey, listen, tools cost $700,000-$800,000 a month have come down. And instead of getting what you pay for and it's chintzy and it's cheap, they've come a long way. I couldn't say that a few years ago. The other thing is, and this is important to learn and know in the business, is that the models are for brokers to give away their platform, give away a platform if you trade X amount. Well, when they used to do that in the past, it was crappy platforms. Not so much anymore. So those are price pressures. And Carl mentions eSignal. They used to be one of the best out there, but they didn't get better. So probably one of the worst. They were expensive and they were good and they had a great platform, but they let people pass them. But that's, again, being part of a good community. Now, did I see this coming, this selling? Of course not. I'm not even watching it. But I do see this chop visualized. I'd be very careful as I long down here because coming out of potentially this chop, so I'm not a victim of this selling if I was stuck. We get through this red, and this happened really quick as I was talking. You're small bullish until it gets back through 33, even though it just got cracked. Is this your setup? Is this a setup to buy a turn, to fade it? I'm going to fade it, Anthony, and I wait for reds to get taken out with some green. You probably are already in if you're quick enough. And you're in, and you could be wrong and not get killed. You could be in and not get killed. They tested you here. Next time down, you're wrong. Maybe you scaled out, maybe you didn't. But you could see where the red get taken out and the greens come in if that's your setup. And this was a quick chop. So you chunk this out too. Fragments. There are buy stops above here. Even though this resistance is resistance, it's held a couple times, but then there's sell stops below here. You continue to cut into what the moves are. A chart that someone in the edge community brought to my attention and I kind of like are and some there were some guys that used to use or still use this size. I know Dave and George months and years ago. And I didn't really use it or listen to it. And someone else says the same thing a different way, and my eyebrows go up. And it's nobody's fault. That's why being part of a good community is good. But here's the middle size buying and selling, where the big orders have come in. Here's 1,100 that came in down in here, and it would have made the other filter. But this is a filter of middle size, 49 and up. It gets through these reds in here, you're going to see a pop like you're seeing. But you want to keep it above 34 quarter, where this 176 came in, and this 50 came in, this 109 came in. You're like, okay, come on, let's go, because you got these two sellers here. Now remember, you got that red edge zone up here around 35, so you need, time is of the essence. You need it to do what it's kind of doing, and you're supposed to be long from below, anticipating the beginning of the move up, because if it goes to 37, 38, it ain't no longer the beginning. The right tools for the right job. And if you have a toolbox, a tool bag with all the great tools all mismatched around, you're not organized. If you have a chart with so much stuff on it, because they're all good, too much stuff. Even if, listen, there's a lot of good stuff, you can't use it all. Just because it's good doesn't mean you have to use it. And what people will get caught in doing is they'll declutter their screens, right? They'll go from too much on there, and they declutter down, and they declutter down, and then all of a sudden, next thing you know, it's like a diet. You eat good, you eat good, you eat good, you cheat, you cheat, you cheat. Now you're no longer on the diet. And Jim and others are saying, you got all the right tools, spend an hour looking for them. Me too. That's my point. You can't spend too long looking for what you're trying to find, or you're not going to get confident in that your setup is a setup. Ready, aim, fire. Let's go. And right in here, this sucks for a rally. If I was in it, I'd be in and out of it. Not working. Might still work and go up, but this wasn't the beginning of it. But you don't have to get your face kicked in when you put on a trade. And I think that to replace fear with confidence, if you know you don't get killed every time you take a loser, you're not afraid to take a loser. That's why I'm afraid to have an argument with my wife, because even if I win, I feel like I lose. Man, look at this size that came in, 500 a side. That's why I didn't light up red or green. So slightly below here, the Bears win, and the Bulls should be winning if they stay above it. And time is of the essence to pop, or we're going to sneak below these two 500 lot. And who cares? Don't ask me, is that the same guy in and out? I have no idea. All I know is that buying and selling came in, and there's a little fight down there. Should be the beginning of a pop. If it's not, you know it below here instead of at 32 even. Did today's session help? Does it make sense? I hope, because it's because of you guys that people look at me funny when I walk around. And I do pick up after my dog if I could find it. If I don't find it, I pretend. What am I going to do? Spend an hour out there trying to find it if it's dark? Plus, he's small. So here's a perfect example. If you're bullish, you're not anymore. After it gets through these two 500 lot players, Bears are in control. If you were bearish and wanted to sell it, you press it through there. Here's some UK opposition. That's more bearish than bullish. That could help facilitate this downside. Just, no Brexit deal, bearish, Brexit deal, bullish is the way that the European markets and our markets are trading it right now. Small driver like the Chinese, US trade talks. Yes, I have a dog. I'll tell you it was last year at this time. Had a moment of weakness. My daughter wanted a dog. I could tell my wife kind of wanted a dog. She never had a dog. She didn't care about it. Now she kind of did, seen it. And I said, she shows me a video of it. And I had a moment of weakness. And I was sold on what my kids' reaction were going to be when we showed it to them. I said, just get it. So we got it. And the reaction was great. It was a great moment. But then that faded. And I got this dog that wouldn't be bad if he didn't have to go to the washroom. And it doesn't shed. I says, I don't want a dog that sheds or one that barks a lot. He doesn't do either. It's a small, half Italian dog like me. I'm watching the markets, guys, and little downside, and it sucked. I mean, you did get, after it got through here, they broke them to 33. Should not have come back. The fact that they came back, it's neutral. Another question you want to ask yourself, or that kind of process, why did it come back? Sometimes it's fine to come back. Other times, like, why did it come back? All right, I see it can't get through this red over here, but it went down to the open, bounced. It's a few rotations, a couple tests. If it doesn't, here's a red edge zone, 86 lot seller. If it doesn't rally and pop through here, I'd be surprised. I'm not going to shave my head. Be careful that another seller came in to make it a total of 137. Decent lot seller. That makes me go from really quick at 35, not at 34, saying not so fast. If I was long, I'd be out 34 half or 3/4, not have to deal with this. Another big seller came in, that one kicked it lower. You can't be worried about being wrong. That's going to be a delay in any building of confidence. I'm going to cut the recording and end the session for guys in the future.